Today, I'm here with Rhys Trenhaile from the Vanguard Team. We're going to be talking about some misconceptions related to Windsor.
Look at the flat line, right? 2024 are the baby blue bars. 2025 is the line graph. It's a straight line. So there's enough people holding off that prices aren't going up, but there's still enough people buying that the housing prices aren't going down. This is an example that I can give you 20 of the same example. House plus additional dwelling units. So if you fancy yourself a renovator or a fix and flipper or a BRRRR strategist, don't reinvent the wheel. These style of properties become very sort of ADU friendly. And what you'll find is between the two units, look at the cash flow, 42 grand. And that house is not costing you 400,000 to talk about the 1% rule again.
Welcome back to the Canadian Real Estate Channel. I'm Adam J.D. Martin, your host. Today, I'm here with Rhys Trenhaile from the Vanguard Team. We're going to be talking about some misconceptions related to Windsor. We're going to show you some market opportunity, and we're going to just talk about the numbers in Windsor. What's really going on? We're going to get you guys all on the same page because we've been hearing some different stuff in the news, and Rhys is here to talk about that today. So, Rhys, welcome back to the channel.
What's going on? Yeah, thanks for having me back, guys.
Yeah, let's jump into it, man. I'm excited to hear what you have to say about Windsor. I know every time we're here, we're seeing really interesting deals from your team, as well as just obviously catching up with how you're seeing Windsor from a boots on the ground perspective. And I think that's really useful for the channel because there's a lot of people that would consider investing in Windsor that don't necessarily live in Windsor. That are watching the channel. And that's something we've seen for years.
Yeah, I'm going to give a sober overview of what's going on and basically how the investor can take advantage of that. Whether you're a repeat investor in Windsor already or you're looking at Windsor as a possibility to invest, I remain certain that we are by far and away the best possible community to invest in right now. If you're thinking in terms of 5 to 10 years, and I'll get into the video, why there is actual data to work through. And I won't get through all of it today, guys. There'll be other videos where I'll get through the rest of it, but there's overwhelming data on where the city's going, and you need to pay attention to that because it far exceeds what's happening in other cities. It's not even close, and we're going to get into it.
Fantastic. Yeah, we'll pull up your presentation here and let's jump right into it because I'm excited to hear what you've got to say about this.
So we are the Vanguard team at Manor Realty down in Windsor, Ontario. I've got a team of 7 real estate agents, and all they do are various specific niches within real estate investment. And they're all landlords themselves. So they don't just know this from a sales perspective. They know this stuff from a landlord's perspective. And you can piggyback on all our people down here, our property manager choices, our renovation contractor choices. These are people we've been using for decades now, So when you're coming down here, it might be new for you. It's not for us. It's very routine. 90% of our investors come from out of town. And that is our YouTube channel down there, guys, if you want to just stop it and add and subscribe if you're interested in Windsor. So yeah, as a market update, the biggest jump is being sort of in the number of new listings, right? It's a good thing when you're investing, when there's more and more inventory on the market and heading onto the market. So what you'll find is days on market now seems to be stabilizing, right? So if you follow my mouse down here, the months of inventory are now sort of stagnating between about 8.5 and 10 months of inventory. And then days on market, again, it's stagnating at about a month, right? Even sales to list price ratio, it's stagnated at about 1 to 1. If you list for 500 grand, you sell for 500 grand.
Yeah.
And I know it looks like towards the top here that the median sales price has gone down substantially. These month over month changes are an anomaly. You'll see on the next slides, it's basically a flat line, guys. And I want you to think about it like this. The market went crazy, and now the market's taking a breather, right? And why the market isn't dropping despite economic uncertainty, right? Because we've got this whole trade war going on, blah, 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 blah. But why aren't the housing prices going down? Why are they? This is number of sales, guys. So you can see like number of sales is pretty much steady through the year. and it was pretty much steady through last year too. This dip down here is just seasonal. Nobody's buying in January when there's 2 feet of snow on the ground, right? So this looks the same as last year. Like, and you can see that like 2024 is the gray bar, 2025 is the light gray bar. And if you just look month to month, like look at this.
It's actually, if you were to put a trend line on that, it's a positive trend. It's actually increasing.
Oh, yeah, it is. It is increasing, but not by anything that's going to make me celebrate dancing naked down the middle of Main Street.
Yeah, sure.
It's a
No, I hear
breather
you.
market. Yeah, it's a breather
Yep.
market, and you can see that with again. I'm not a huge fan of average sales price, guys, but we use it because we know you're familiar with it. I'm going to go back up 2 slides for a second. Median. Get used to using median, guys, if you're an
Yeah.
investor, because all it takes is one billionaire to buy a house down here, and all of a sudden you're going to go, "Wow, the average house price went up." Like, not really. Median is like, let's say, 100 houses sold in Canada this year, or in Windsor rather this year. You're looking at what the 50th house sold for, the one right smack dab in the middle, and that gets rid of outliers that screw up average,
Mhm.
right? So, but what you're seeing here and what the narrative is, and it's the same for median. Look at the flat line, right? 2024 are the baby blue bars. 2025 is the line graph. It's a straight line, and it was a straight line last year. It's basically a 2 year breather. So you had all this property appreciation. Now you got a trade war. Even though you've got low interest rates, even though you still are in the middle of a housing crisis, you do not have enough housing down here. So even though you have those things, on the other side, you've got market uncertainty. So people are holding off. So there's enough people holding off that prices aren't going up. But there's still enough people buying that the housing prices aren't going down. So there are lots of people and investors pay attention. You look, everybody knows the Warren Buffett thing. Be fearless when they are fearful. Be fearful when they are fearless. In other words, when everybody's hot to trot on crypto, that's probably not the time to buy crypto, right? Because the market surges up, right? And so when they're fearful, like right now, market uncertainty, oh my God, trade wars, oh my God, that's when you're supposed to be buying. That's the best time to make money as an investor,
Yeah,
right?
I would have thought, just personally, I would have thought actually that there would be a relatively elastic demand for investors in Windsor, because I would have thought they'd see a trade war, they would see tariffs, they would see everything
Yeah.
related to the, sort of international work situation that happens with Windsor. There's so much back and forth between America and Canada there, that I personally would have expected to see the market have a fairly substantial drop. And so to see it be flat, to me, is actually a very, very, very high confidence signal that the market is
Yeah.
actually, it's more than speculation. It's founded on like real jobs, real incomes, real people
Right.
living there. And I think that that's actually um, I don't think that there would be that many people that don't live in Windsor that would be in disagreement with me. Like, I think a lot of people would look at Windsor and say, wow, trade war, tariffs, we expect Windsor to drop significantly. So for it to stay flat is actually a massive confidence signal in the market.
Well, and I guarantee we're starting to confuse some people watching this because in their heads they're going, because they get it from the media and it's not their fault. But Windsor has the highest unemployment rate. But Windsor has the highest unemployment rate. Windsor's the battlefront on the trade war. Windsor's the because it's said in the paper all the time. I'm going to get into all this in a second, but wait till you see the jobs data, the real stuff underneath that unemployment rate. And if people have watched my videos before, they know I hate the unemployment rate as an economic indicator.
Yeah.
It's completely inaccurate as to how a city's doing. It has no bearing, guys. And I can show you example after example of that. And we are a prime example of that and always have been. Okay, so let's keep moving um, really quickly so I can get to the stuff that ads is bringing up here. Like, as far as the why housing prices aren't going down. I'll get into it in a sec. I'm going to do a deep dive for you guys so you can invest down here with confidence. Really quickly with the residential units sold. I don't, this is issued by the Windsor and Essex Real Estate Board, this graph. I actually don't like it because if you look at the numbers down here, they'll change as far as the variance between the price ranges. Here it's about 30, 40 grand. Here it's 30, 40 grand. But then over here, it's 100 and whatever grand. So it gives this false sense of, oh my God, everything's selling in this price range. Like if you actually kept the demarcations equal, this would actually be a softer curve, right? It'd be more like where my mouse is, right? So, what I want everybody to understand is that Windsor's sales are basically in the low 200s to about 700,000, right? And it's more homogeneous than it looks like here, because again, they're using small demarcations here and then big ones here for some reason. I don't understand why they did that. But what I want you to note is this: the cliff, and this cliff has been here in some shape or fashion for a couple of years.
Yeah.
Look at the dearth of sales over 700 grand.
Yeah. It's
It's
not even
crazy.
equal to the 550 bracket, right?
It's
That
crazy.
previous
So what
area.
that's telling us, and we can see this with our own investor base, is we have a lot of first time home buyers and a lot of younger buyers, more than we had during the red hot market. And we think what's happening is the first time home buyers and the people moving to Windsor as well for jobs, they're just buying a good starter home. Like, I'm new to Windsor. Let's just get something basic, honey, until, we really understand where we live and we'll buy another place, a bigger place in 5 years, or it's the young couple or the people that have been waiting for years as first time home buyers to get into the market. There's programs now to help them get into the market. So we think that a lot of this is bunching up with those demographics that I just mentioned, right? 700 plus, this is where your professionals are, your business owners, and they're all just hanging tight. And a lot of it is they're not really excited about what they would get for their current home, right? Especially when you're talking about people that already own these houses and are selling. Like, we just sold one on Roseland Golf Course, and I'm telling you, historically there has been insane demand to live on, and I don't get it because it doesn't appeal to me. But some people really, really want to live on the golf course, especially Roseland. Roseland is one of your top three, and we had a listing that was properly priced on the golf course at 949,000, and crickets. We had to end up selling it about significantly less, just to have a choice. And that's the market right now if you go over 700 grand. What I want people to know, if you're buying a house plus an ADU, for example, you're buying something to fix up and you intend on selling it immediately or selling it in a couple years from now to buy bigger stuff, whatever. Understand that if you're buying in the low twos and through the threes, so sort of up to the 76 here. So if you're buying in here and you're fixing up in here and you're moving that property's value into this area, you're going to find you have a lot of buyers for your property.
Mhm.
Right. So if you have some short-term goals of flipping some properties to build up more equity to invest with, then try to buy in that 200 to 400 range, fix the place up, increase its property value into the sort of the 400 to 700 range.
Yeah, that's a
If that
really
makes
great
sense.
way to look at this data and gain some
Yeah.
insights there. 'Cause I
That's
mean,
why I
what's
love those
certain
bar
is
graphs.
you don't wanna be buying at 750, fix flip up to, 1,000,000. That's really important.
Unless it's a multi-unit, right?
Sure.
Because then you're going to look more at income approach to value as
Yeah,
opposed
that
to
is.
comparative like this.
Yep, and that is one thing again that we are not seeing in this graph too, right? Is the type of housing that we're talking about, because I assume included in this chart there are single family detached, there's townhouses, there are condos, there's all sorts of things in here.
Oh
Or
yeah, this is
yeah,
all. This is as the illustrious Beastie Boys once said, "It's all mixed up like pasta primavera." Yeah,
I love it.
there you go. I just used a Beastie Boys quote. Anybody
I
born in the last 25 years just went, What's this old man talking about? This
unsubscribe
old
right
East Coast
now.
rap."
I love it. A Beastie Boys quote.
I'm sticking with the Beastie Boys. Okay, moving on. Grandpa Trenhale's moving on here. Okay, so one of the things I want to show you guys is how housing prices are in various cities that you're going to be familiar with here. The next slide is median family incomes in a variety of different cities. Okay, and I'll show you how this data, when you put it together, is important to understand. So I think it's safe to say that all of these cities have some variance and some intensity on the housing crisis. We're having a breather right now because of the trade war, but that doesn't, and also because we've now reduced foreign student housing numbers and temporary worker numbers. So you got this mini breather in the housing crisis, right? Market uncertainty, and you've taken a few 100,000 people out of the equation till the market catches back up again. So because you still have a lot of immigration going on. And because you have to continue to grow your economy. I know some people don't like it. There's nothing we can do. Capitalistic societies need population growth. So if we're not spitting out enough babies, you got to import your workers. right? You got to immigrate them. And I know Reese, haha, spit no bait, but it's true. Like if you're not replacing yourself, which is an average of 2.1 children per couple, and we're not even close to that anymore in the
Yeah, we're not
Western
even
world,
close to that.
we got to bring people in. Yeah, you
Yeah.
don't have a choice. You don't have a choice. So they will continue to bring the numbers in, and it will continue to create a housing crisis. And part of that problem is immigration and overall economic health for the country. That's a federal problem. Housing's a provincial problem. 80% of the housing crisis in each province is on the province,
Yeah.
right? The feds can only do so much, and the city can only do so much. It's the province. So you're going to see like a pretty bad disconnect. And that's going to continue in all these cities. So let's get into why Windsor is a great place to invest based on this housing crisis that isn't going to end in the next seven. It takes 7 to 10 years, depending how quickly we can rip through things. And if you don't know me, guys, I'm actually becoming increasingly large developer. So we're creating a couple hundred residential units in the downtown core of Windsor right now. So I'm living and breathing and sleeping this stuff, both as a real estate agent, as an investor, as a developer, all in Windsor. That's my bag. There you go.
Love that.
So median price comparison. So we talk again about if 100 houses sold in Windsor, what the one right in the middle, the 50th one, what it sell for. In Windsor, that's 515,000. As you go up the 401, 605,000. Center of the universe, 1,054,000. Right, and then Hamilton, that is really feeling those effects of Torontonians. I'll just take the GO train, right? So now Hamilton's properties are going up. And then Ottawa is always strong on the numbers because they have so many civil servants, right, with the feds. So what you're going to see with Windsor is it's basically the same house is half the price as Toronto.
Just have a moment of silence, by the way, for Canadians living in Toronto. Like, how is that? Like, that's actually an unreasonable number. The,
Yeah,
there's
yeah.
no way like that
I'll
makes sense. Anyways, I'll move
I'll
on
show
real
you.
quick
I'll
from
show you
that,
in the
but
next slide
that's
how it's even. Oh, sorry, man. Go ahead. My
no,
bad.
sorry. I just like I'm actually astonished when you put numbers like this together
Yeah,
because I don't care who you are. Windsor has all the things that Toronto has in terms of entertainment, food, culture, neighborhoods, places to live, great neighborhoods,
yeah,
bad neighborhoods. It's just a city. Toronto's just a city. How the hell is the average person like the median price at $1,054,000?
yeah. And I appreciate you hyping up Windsor, but I will add this: we actually have more amenities than Toronto. It's
Sure.
quite
I,
significant because we're right next, like, guys, right out my window, right here from my office. That's downtown Detroit.
literally, you
I'm
can
less
drive
than a
across the
10-minute
bridge.
drive away from downtown Detroit. I can go for
Yeah.
lunch there and come back. That's what
Yeah.
we do,
Of course.
and
Of course you would.
yeah, and there's some people that still think, Detroit's like, RoboCop,
Yeah.
or it's
Yeah,
like
for sure.
look up Detroit and how it's risen from the ashes like a phoenix over the last 10, 15 years.
Absolutely.
It's an amazing. I mean, we can't. I mean, we love it. We still can't quite believe the transformation. Like you're ice
Yeah.
skating downtown in the middle of this massive roundabout called Campus Martius. Like yeah, and now they got another announcement for 1.6 billion in front of the Renaissance Center. They're going to knock down two of the towers. They're going to make it like what's that place in Chicago on the water? That's amazing. It's got like the Ferris wheels and everything.
Yeah, oh my god, and I love that place too.
I know, right? I can't think of the
The
name.
pier,
Anyway, they're
damn it.
duplicating that,
Yeah.
and they're taking influence from Windsor and its waterfront. And
Mhm.
they've been doing that now for three mayors since Mayor Archer. They've been trying to emulate our waterfront parkland. But Detroit's doubling down. They're adding restaurants and entertainment venues, and man, yeah. So this area just it continues to just go up. The whole area is trending up, and has been for 15 years. It's a wonderful time to live down here and see it. But yeah, I mean, we have 6 more weeks of summer a year than Toronto. We're 5 degrees warmer.
Yeah.
Like think about what 6 weeks worth to you. We have the highest net disposable incomes of any major city in Ontario. That means we can afford the boat because we're surrounded by water. And of
Yeah,
course,
and
we
by
have
the
more
way,
boats per capita than anywhere else in Canada.
yeah, and
Yeah.
for people that don't know, go have lunch at the yacht club. It's great.
Oh, you've been
Like
to what yacht club? Yeah.
for people
Yeah.
that don't know about that, like there's real boats in
Yeah.
Windsor. You can go have
Yeah.
lunch at the yacht club and it's fantastic.
Oh, there you go. Yeah, I was there. I was there with a builder couple of months ago, and yeah, it's right across from Pesh Island, which is you kayak over. It's where Hiram Walker, who created Canadian Club whiskey,
Yeah,
he had his summer home on the island, and it's just beautiful canals and old bridges, and it's amazing. Anyway, sorry, I'm waxing poetically because this isn't about moving to Windsor; it's about investing in Windsor. But yeah, I
sure.
mean,
All right, let's keep going. I was
you
just
know,
pissed off at a million and
yeah.
fifty-four
So okay,
thousand.
so coming back to this, guys, I want you to remember this as I go to the next slide. Windsor, 515,000. Toronto, double. Okay.
Yeah, let's just say
Now look.
double. It's easy.
So look at the difference now in median family incomes, and bear in mind this data is now old. Windsor's
Wow,
numbers have shot up. Okay.
this is going to be annoying.
Okay. So here's your median
Oh
after
my god.
tax household income, which is basically husband wife, right?
Yeah,
Toronto's second in Canada at 85,000. Very good. Look at Windsor. And Windsor's high, I guarantee we're way higher than this now because
that's
this was
insane.
2020. Our city's economically exploding. There's no way it's still at 73 grand. There's just no way. Yeah. Um, but anyway, I can tell you that we're trending upwards here. I'm sure a couple of these cities are trending upwards as well, in fairness. But what I wanted to show is look how similar our median family incomes are. But the most expensive thing that we have, guys, is a mortgage, right? It's a
Yeah,
house. So when you're able to buy your house cheaper down here, right? And we have the double whammy down here too. Everybody's related to somebody that works at the big three. So we get car discounts too, friends and family, right? Like, so you get your cars cheaper, you get your houses cheaper. This is why
yeah,
we have the highest net disposable incomes, man. Like, yeah. In fairness, you'll get Windsorites complaining down here. They have no idea how much better we have it financially. They don't.
yeah.
They don't. Most people don't get it because they live in it, right? They live in the fishbowl. They're not looking in the fishbowl. So why I'm bringing this up, guys, is I don't know why I thought of this slogan, but there's more room for Jello down here. And what I mean by that, I know. Sorry, just let me roll, man. Just let me roll. I'm having a day. What I mean by that is now imagine the housing crisis has had its breather and boom, it's coming back, man. Right? Everything's flying again. And it's going to because there's not enough housing, supply and demand. It's a very simple economic concept. It'll go back up again. As it's going up, rents are also going to go up. As a landlord, you should be very interested in that because Windsor's rents can afford to go up at a higher rate than other cities because we have higher median family incomes relative to what you're buying a house for, but also what you're renting that house or that multi-unit for. Because the landlord bought it cheaper, they're not charging you as much rent, right? But as the landlords continue to buy more expensive properties because the property values are going up, they have to charge more rent to compensate. And Windsor can actually handle that. I mean, again, people are going to get ticked off watching this, because there's an emotional knee-jerk reaction to this. But I'm just talking the data.
Yeah,
Because we're not going to build housing fast enough. It's going to drive pressure and demand on the supply. That increases prices. That's not don't get angry with me. That's just macroeconomics 101. That's first year economics, supply and demand. So you're going to see
and
this
it's actually
go up.
twofold, right? Because it's not only just that the investors are buying at higher rates, which puts them in a situation where they need to demand higher rents, but
Mhm.
also some of the bottom people who may have purchased a building are now priced out and must also rent. So, and that cycle continues. And again, that's something people can get upset about, but just like you said, like that's literally just supply and demand. It's exactly how it works. You shift up a demand curve,
Yep.
it completely changes the equilibrium price. And that's where the people that have
Yep.
capital, liquidity, and information, the right information, are going to be able to make calculated decisions to invest.
Yeah, and guys, this kind of trend that we're talking about right now, this is not tomorrow. All right. This isn't a 24-hour McDonald's talking here. We're talking 5 years, 7 years, 10 years, right? This area is poised for economic growth for the next decade. We are one of the 12 pillars in North America of the fourth industrial revolution. That doesn't go away because an American president for 4 years of that span is monkeying around with their trading partners. It doesn't go away. It temporarily gets a breather. I can tell you right now, I had one of the MPs, he's a friend of mine. He was sitting at my fire pit. This is going back last summer, and we were talking about all the projects that are now currently on hold because of the trade war. They're not going away. They're not going to other countries. They're not going to the United States. They're just waiting this particular administration out because the supply chain that they're hooking into down here, now that there's a mothership battery plant in Windsor, got its occupancy permits 2 weeks ago, and it's already almost at full capacity production. That's how quickly they came on board, man. And they're punching out more battery capacity than the entire United States combined. That's including our good chainsaw wielding buddy Elon Musk. It's that big, guys, and I'm not even getting into all the other stuff around it. I'm going to give you a snapshot of it right now. All right. So what I want to talk about is what you're reading in the newspapers that are generally coming from the GTA with ingrained biases towards Windsor that literally go back 100 years to Prohibition. So Toronto started hating on Windsor when they wanted to stop alcohol consumption. So Canadian prohibition. And their problem was Windsor wasn't predominantly Anglo-Saxon. We were the one city that was a whole mix, and it still is. French Canadians that were the original settlers here, lots of Eastern Europeans, lots of dirty, rotten Celts like me, and a lot of dirty, rotten Roman Catholics like the Italians. So we were beneath the other cities in Ontario. We were considered a frontier town, right? Like we were the Wild West as far as the rest of Ontario was concerned. So when they tried to ban booze, you had all these cultures in Windsor that actually start giving diluted wine at the dinner table to their kids starting at about 8 or 9 years old. It's part of your culture. So to say, oh, no more alcohol, it's like, do you want us to stop talking with our hands? Like I'm talking about the Italians. Like it's like, you're not going to stop them. And especially when you're on a peninsula surrounded by the United States. And so that was where this real sort of anti-bias with Windsor versus Toronto started. If you go to other people in Canada, they have totally different opinions of Windsor. But if you go to Toronto, you'll find people that think, oh, that's the armpit of Canada. It's like your great grandfather used to say that, but thanks. Yeah. So what you get in the media is a reflection of that because the journalists also come from the GTA. So there's an ingrained bias they won't even know that they have. And I've had instances, the city's had instances twice, once where the mayor got involved on how inaccurate the story was in the Globe and Mail about Windsor. It was amazing. It was called Snake Eyes, and it was the most revolting, inaccurate magazine article. It was so bad that the mayor got involved, and the Globe and Mail stood behind the story. So understand, I'm not a super right winger saying, oh, the mainstream media is misleading you. What I am saying is there are subconscious, preconceived notions of the city specific to the GTA that are complete fallacies. And so I've got that now on the screen for you as an example. This is what I'm reading right now in the national news that emanates from GTA. Highest unemployment rates in Canada. We're the battlefront of the American trade war. Right? Development's on hold. Even though we just had an announcement for another 378 residential units yesterday. Impact on tariffs even higher than reported. That's what you get in the paper. Now, this is what you need to know as an investor. This is what's really going on. Those two Mint plants I'm talking about in number one there, those are Taiwanese plants. The second plant isn't even announced in the news. I only found out about it because I was talking to one of the higher ups at Invest Windsor Essex, and he casually mentions the second plant that they're joint venturing with a Japanese company. I'm like, what? I didn't see that in the news. Oh yeah, no, it just didn't really hit the news, Rhys. I said, how many more jobs is that one? Because the first Mint plant is 1,149 jobs, and we're not talking unskilled labor at a call center. We're talking high skilled trades. They're big money, and when you've got a trade, they're more stable. Because what ends up happening in a recession is these companies don't want to lose their skilled trades because they know they won't get them back. So everybody's developed they learned through the global meltdown. Everybody's learned to hold on to their trades through the bad times. They don't want to get rid of them because they know they're just going to go and do something else and they'll never get them back. So 1,149 jobs. The second plant, it's 1,000 jobs. It's not even in the news, right? They're all skilled labor. And these are the tier 1 and tier 2 plants that are now being announced supporting the big mothership battery plant. When you're manufacturing batteries and you have just-in-time delivery, the problem is, unlike conventional cars, for example, you can't have a part come up from Kentucky like you used to. It's too far. Battery manufacturing is more fragile. So all the feeder plants and supporting plants, the tier 1s, tier 2s, they have to be close to the mothership plant, right? And so a lot of the reasons why Windsor landed that plant is because they placed it right smack dab in the middle of North America's biggest concentration of tool, die, and mold making. We're 37% of North America's tool, die, and mold making, which is insanely high, right? It's ridiculously high. That should be way more spread out, but it's not. It's all here. And we used to be 27%. We responded better than the Americans during the global meltdown because Windsor companies were already crisis ready. They were more battle hardened because, when the Canadian dollar is all of a sudden at par with the American dollar as it was under George W. Bush, Americans are like, well, cool. Canadians are like, oh, snap, I can't make money anymore, right? We need at least a 1.2 variance for those companies that make money exporting in the States. They have to have a weaker Canadian dollar. Anyway, so my point being is we're well situated and there's way more announcements coming, but a lot of the about $10 billion in announcements are just waiting right now. It's insane. It's insane, man. So in 2025, now remember on the last slide, guys, highest, and they'll say it over and over even in the newspaper, highest unemployment rates in Canada. Well, this year, 9,300 new jobs created so far. We had 1,600 more jobs, number four there. We had 1,600 more jobs announced last month. In 2021, we had 147,000 people employed down here. 2025, we got 227,000. And these are not unskilled jobs, guys. These are trades, right? We have one facility alone they're building right now, 100,000 square feet. It's going to be one of the two largest research and development facilities in the world for batteries. It's going to have 650 engineers and PhDs in it. Just in that alone, do you understand how much business is going to spin out of there for more factories, more innovations, more economic expansion? And here's my question: where am I housing 650 engineers and PhDs with their families? Because they'll be all moving here. They won't be Windsorites. Where are they living? Just in that
Yeah.
one building. That's what I'm dealing with down here, man. And people can't see it right now because we're in a breather. It's an artificial
Yeah.
breather caused by the artificial trade war that never should happen. Otherwise, we'd still be doing this.
I mean, those stats are just
Um,
amazing.
well, look at number 5. That was
Yeah.
just in the paper yesterday, guys. You can look it up. It's been in the paper before. But look, search that on the internet if you think Rhys is talking trash. They
Yeah.
expect electricity demand to quadruple down here in 10 years. Dougie Ford's
Yeah.
doing this to Hydro One right now. Get your butts down to Windsor. He's on them. I'm hearing it through the political grapevine. Dougie Ford screaming at Hydro One because they keep dragging their feet.
Yeah. Well, and this is honestly going to continue to be a huge problem throughout all of well, really the world, but specifically North America because of all the AI that's happening. Like, there's so much demand for electricity that it's insane. We need nuclear immediately. And, America, I don't think is really changing their winds on that too quickly. And so
Right.
I can see a world where we continue to build up nuclear power in Canada and export that energy to the US because we're very good at doing that.
Sure.
And
Sure.
so, absolutely, that's not a Windsor unique thing. That's absolutely happening. There's not enough power. There's not even close to enough power anywhere.
Yeah, so rest of Ontario, it's 1.7. Windsor, it's 4.0
Yeah, it's
as far
insane.
as
I
the
mean,
increase in demand, or 4x instead of 1.7x. Like it's, and you have to understand, guys, it's not like we're going from, agricultural farming with Mennonites down here to heavy industry.
yeah,
We're already heavy
it's
industry down
already
here.
industry.
And you're
Yeah.
quadrupling that. It's not like all of a sudden you're bringing online a bunch of big factories that didn't exist. You're just increasing the number of you're
Yeah.
just increasing that output. Most interesting thing about that is the Independent Electrical Authority, the IESO in Ontario. They're attributing that demand in energy to three things. One is obviously the factories is not rocket science. One of them, and you guys might not know this, but the other side of Essex County is actually the greatest concentration of greenhouses outside of China. And they do all the cash crops because Essex County originally was a swamp. It's a drained swamp. So you have soils called histosols that are the most fertile in Canada for growing. So when you drive down here, you're not going to see cows, you're not going to see livestock, and you're not going to see a lot of wheat. Actually, I don't think we have any wheat down here. You'll see some corn, but you won't get wheat. You'll get the cash crops. So you get the tomatoes, the cucumbers, you'll get the pumpkins, you'll get the strawberries, you'll get, oh, we got all the wineries now, of course, and then soybeans is another big one down here. They're all cash crops. So they're more expensive per acre. So that's why you can afford to build the greenhouses and grow them all year. So there's a big energy suck on that. There's a big energy suck with all the new industries, but number three is housing. They anticipate over the next 10 years a lot more housing coming online. And again, this is where we can take advantage, right? As investors. Stellantis is getting a new third shift. This is where we do the Dodge Chargers and the Dodge Caravan minivans. So in the paper, they'll say, "Oh, that's nice. Stellantis is getting its third shift back, 1,500 jobs. Oh, that's nice. Yeah, good for them." What they don't understand is that when you add the third shift to the assembly plant, every single tier one and tier two supporting plant, all those tool, die, and mold industries, the stamping industries, the parts manufacturers, they all have to add a third shift
Yeah.
because it's just in time delivery.
Yeah, of course.
That's 15,000 jobs. That's a 10-to-1 ratio. And this is why it's important to have the motherships, right? The
Yeah.
Stellantis assembly plant, the biggest battery plant in North America. When you have those, it creates way more jobs around it than the actual plant.
Yeah, for sure.
Right. So, and then look at my last line, half as many housing starts in 2025 as there were in 2024.
Yeah.
So you have all this coming. You got the you got the provincial government and federal government trying to keep up, building the international bridges, building the mega hospitals, building the freeways. They're trying to keep up. They know what's coming, and we're still falling short in one category: housing. And if you're a real estate investor, what did I just say as far as your bank account's concerned? Right? Tell me what's going to go with the profits, man.
Yeah, and what's interesting is, uh, Windsor doesn't exist in a vacuum, so of course the rest of the world gets a vote. But the argument to this is like, yeah, but there's alternatives. Well, no, there's not really, because the same story, not about all this employment, but the same story about housing is happening across Ontario.
Sure it
Like
is.
you
Yeah.
can't just decide to move to London because all of a sudden there's 20x the houses. There's just not, right?
No.
There's not production anywhere. And every city that we talk to and get updates from will tell you that there are many, many, many less housing starts now than there has been ever, really. And so
Yeah.
that's obviously
Yeah.
a huge problem. And so it's not as if there's a better alternative. These markets are all constrained by the regulatory nature of Canada and Ontario,
Right.
and
Right.
the constraints around building, right? Whether that's cost, whether that's regulation, permitting, all that stuff. It all just takes time. And so
Yeah.
again, Windsor's not in a vacuum. However, any argument against this falls flat because it's happening everywhere. There's just no houses. There's no houses being built. And to your earlier
Sure.
point, we have a negative replacement rate, but we are experiencing a lot of immigration. That means these numbers will continue to grow, right? And
Well, the
particularly in a microeconomic state, when you're adding all these jobs, there's of course higher demand for houses. Of course, like that's
we
nobody
don't
can
have a
argue.
choice.
Yeah, yeah. I mean,
As
you
a
literally
country,
don't
we
have a
don't have
choice.
a choice. Yeah, we have to bring these people in to sustain our economy and grow our economy. You don't
Yeah,
have a choice, guys. What you're saying is absolutely correct. I think the one thing that I will add to that is twofold. One is you can cash flow on you come to Windsor for the cash flow,
yes,
right? So yes, I think all major cities are going to see property appreciation without a doubt. I think Windsor can handle more property appreciation because I just showed you the difference
yeah,
between
hundred
median
percent.
family income and housing price. That's a ratio that nobody else comes close to out of the major cities in Canada, right? So you have cheaper housing, higher median family incomes. It means there's more room, again, more room for jello, but there's more room for property values to go up. There's more room for rents to go up, right? And again, some people are going to, especially Windsor renting, are going to hate me saying that, but it's not me saying that. It's what the data is telling us,
Yeah,
right? And so you are coming, we've always joked around saying you come to Windsor for the cash flow, right? But these other bonuses are sitting there as far as the rapid property appreciation that we fully expect over the next 7 to 10 years. You can't stop this train, horses out of the barn. Like you can see how, and guys, this is not exhaustive. This is just a sample
yeah,
of what's going on, what I put on
y-
the screen. That's just a little taste for you. It's insane how quickly we're going. And we're one of the 12 pillars of the fourth industrial revolution down here. Like, I'll add one more thing before I move on. Before I want to give these guys a couple deals of the week before we run over time. I'm going to give you one more thing with the battery plant. In the news right now, they're erroneously reporting that the battery plant is pivoting to building batteries basically to be put into warehouses so that when your solar panels collect all that energy during the day, it stores into the batteries and it's let out at night, right? And the reason for that is it is the green tech in the world that seems to now be dominating. Is solar panel manufacturing's literally doubling every year internationally. It's crazy. So if you read the Economist magazine, do a quick search for the Economist magazine, guys, and look up uh, batteries as the next $1 trillion green tech industry and read that article. You get 4 free articles, I think, a month. Read that article and then contrast that with our battery plant, right? It's not the Stellantis battery plant. It's Stellantis and LG. LG is the South Korean battery manufacturers. They're the third biggest in the world, and they're the only ones in the top 7 that aren't Chinese. And
Yeah.
we all know Chinese factories don't travel well. They keep the factories in China. So it's
Yeah.
only really LG that's gonna, go do its thing at a global scale internationally. Windsor got LG. I can't begin to tell you how much of a horseshoe up the backside that is
Yeah. That's
because of
great.
things like this. They're going to not just build batteries for cars, they're going to build batteries for everything. And I just said it's the next $1 trillion green tech industry just for the one use, which is put them into warehouses. But in the paper, oh, they had to pivot. They didn't pivot. Like, I'm just getting tired of not, the scribes not understanding what's going on down here. And in fairness, they don't have time to understand it.
Yeah.
They got 3 p.m. deadlines every day to get their news stories out. They're just flying by the seat of their pants. I get
Yeah.
it, but it's like it's inaccurate. And as investors, we need the data. We need to know what's going on.
Yeah, I agree with you. I think that's really fascinating, and you can't argue again with these stats. Like it honestly
Yeah,
doesn't matter if they're warehousing the batteries or not. Like that's fantastic. Batteries are
yeah. And if people,
obviously the way.
oh, it's totally the way it's
I mean,
going.
just look at
It's funny
anything you
because a lot of,
use today. It has a battery in it. Like just about everything
yeah,
you use now has a battery. And if you just think 20 years ago, what had batteries? I guarantee you, it's like almost none of the things you use on a daily basis had a battery
yeah,
and now does, right? Like,
yeah,
and that's where we're going. It's all about
yeah,
power, and in fact, you can look at any civilization and really try to understand and follow power. Power is actually what causes highly civilized societies, and that used to be proximation to waterways,
yeah,
and
yep.
ultimately that was for both logistics and for power. And Windsor's one of those fascinating things that has both of those, right? And
It really is, man.
that's where it's going to continue. And you can just look back
So
thousands of
now,
years. You can track civilization back to those two things.
yeah, and you're going to see other infrastructure follow that. I know there's talks right now about doing another, a more modern rail tunnel between us and Detroit. We already have one, but the bigger rail cars can't get into it, so they're talking about doing a bigger one. We obviously just finished the other bridge. Um, which one am I missing? Oh, and now we're expanding our Windsor Port Authority. We're identified as one of the, I think, the 6 ports in Canada that they're going to heavily expand so that Windsor's going to be able to take containers and container
Cool.
ships,
Yeah.
which
I
is
mean,
really
that's game
cool.
over. That's game over. That's how
I'm
you
a
move.
boat nerd, man. I follow
Yeah.
these boats and which ones are salties coming from the ocean through the St. Lawrence Seaway, and what are the Lakers, and it's so interesting. It's going to be very interesting to see container ships over the next 5-6 years start coming in,
Well,
and of course that
I forget the
generates
stats,
all
but
kinds of new.
it's like 1/1000th or something of the cost to move something by water, right? Than it is like
Oh,
any
it's
other
nothing.
way. So it's like
Oh yeah,
literally the way to promote economy and
yeah.
civilization
Oh,
and industry. It's the way.
y- yeah. And to your point, they're figuring out how to do container ships now and cargo ships in general using a combination of wind power and batteries
Sure, of
instead
course.
of using diesel. Yeah,
Yeah, yeah. It's just
so cool,
amazing.
man. Okay, let's get moving to some deals of the week, shall we?
Let's do it.
Guys, I'm just going to give you a couple basic examples. So this is this is a fourplex that Sadie Morrill on her team has listed. It's in Ford City. Incidentally, that's where the second mass production factory ever was built. The first one was in Detroit. The second one was in Ford City, part of Windsor now. So that's a fourplex. They're looking at about 600 grand. So you're already down to about 150 grand a unit. There's nothing
Yep.
to do. It's not beat up. This thing is in really nice condition. The landlord really took care of it, and Right now they have one tenant turning over, which is the lowest rent. So all of a sudden you're going from good cash flow to significantly good cash flow for that price. So if anybody's interested and sees this video, just reach out to me or go to our website, thevanguardteam.com. Reach out to Sadie and ask for the cash flow analysis, but just make sure it includes the new rent on the fourth unit starting in January because it's a significant difference.
Guys, that's really close to like a 1% rule situation here. That's fantastic.
Yeah. Yeah. No, this
Um,
is like a really good one. Yeah.
Yeah, and that bedroom
Yeah.
mix too, guys. Like, if you're just watching this, you're trying to learn about Windsor, you're trying to maybe
Yeah.
get into some of your first investment properties. The bedroom mix is so important, and Windsor
Yes.
sometimes can try and get too much into a small space. This is not one of those. That's fantastic. Three 2-bed units and a one 3-bed. That means you've got a large range of possibility for tenant quality, and we're not looking at four bachelors. I think that's really important to talk about when we're saying, look at this building. Just consider
Yeah.
that.
And this neighborhood is trending upwards. So for people in Toronto, if you think of Ronchamsval or Cabbagetown 15 years ago, think about what it was and what it is now, right? So, what you look for, guys, when you're investing into a neighborhood, if it's looking like it's a little tired, right? What you're looking for is are the artists, the gay couples, and the hipsters moving into the area? Because if they are, that's where you want to invest if you're going to be neighborhood specific, because they make the neighborhood cool and trendy. And then the young professionals want to move there to be around the cool kids. And then everybody gets a little bit older. They start marrying each other. About half of them stay, and about half of them move out to the baby farms out in the suburbs, right? But all of that pushes the property values up. And why it starts with hipsters, gay couples, and artists is they tend to be childless, especially when they're younger. So they have a higher tolerance for slightly higher crime level. That's all it is. Yeah. So you'll
Yeah,
see that
probably
right
more
across
of
the
a
Western world.
willingness to spend too.
Yeah, so this neighborhood's already about 5 years into that 15-year process. And you guys have to understand Windsor, and I don't, uh, we're blessed that this is the case. I don't know fully why it's the case, but we don't have a slum area. We have low income neighborhoods, just like any city, but they're vibrant. They all take care of each other. Do you know what I mean? So our crime rates are super low for a mid-sized city. You know, even with the way drugs have gone in the last 20 years, like we're still pretty good on, violent crime has continued to go down, right? Break and enter has gone up because people are, feeding addictions. But actual severe crime has continued to go down. All right, so there's this one, and this is an example that I can give you 20 of the same example. House plus additional dwelling units. So if you fancy yourself a renovator or a fix and flipper or a BRRRR strategist, don't reinvent the wheel. You come down here, you buy a house, especially if they're, oh, and this one is, there you go. So this one's a back split 3 level. So you want back split, side split, 3 level, 4 level. There's other exceptions, but those 3 level and 4 level, they always have the necessary headroom in the lowest level to beat a code. And they always have a side door or a back door that's a separate door for an entrance, point of egress. So these style of properties become very sort of ADU friendly. And what you'll find is between the two units, look at the cash flow, 42 grand. And that house is not costing you 400,000 to talk about the 1% rule again. Like, and I know you guys probably think, oh, Reese is just an exaggerating real estate agent. That's actually small c conservative, the 42,000. When I saw my teammate Jason Balsden does all the house plus ADU sales for us, and like I was like, he's using very conservative rents, and it still looks really good, right? Yeah. So trust me, you get much higher rents than that on that place. So those are the examples, guys. We can do deeper dives into the numbers, but I knew by the time I got here, I wouldn't have a lot of time left on this podcast. So I've just given you the Coles notes. And kudos to my host for pointing out the 1% rule. I don't think of that one readily. I'm all about cash flow, man. What's the cash flow? Because I know where the property appreciation's going, right? What's my cash flow? Yeah, that's what I love.
Absolutely. Well, Rhys, thank you so much for coming and chatting today. I know some of the stats that you shared and just some of the insights that you have as somebody who's operated, lived, built,
Yeah,
invested, and
yeah,
cash flowed in Windsor for a long time. You bring always a unique perspective on the market. And I think a lot of what was said today, I would encourage the viewer to just fact check it all, right?
yeah,
Google
yeah,
everything we just talked about. If you have questions when you're done with that, or you have some concern about anything that was said, drop a comment or follow Rhys over to his YouTube channel that we showed you at the start of the video. It's also in a link below here. And continue to do that deep dive, because ultimately what we want to do with this channel is educate and inform you,
yeah,
and position you to just ask the right questions. And so I think this chat today for me was really enlightening, because I saw some stats that I would not have expected. Rhys has not been on the channel for a little bit, and so I purposely don't go and Google or research any of the numbers on a market before I get an update. So coming into this video today, I was personally expecting Windsor to have suffered from a lot of those international affairs, and a
right.
lot of just what's been going on with economic uncertainty, interest rates, tariffs, all that. And so for me, it was really useful today, Rhys, to talk to you about the reality of the situation, right? The
Yeah,
reality, what are the facts? What are we actually seeing
yeah,
versus what you may just assume in your mind, or even what you may read on, say, a mainstream information source? Because again, clicks are generally based around negative information. That's not what we're about here on the Canadian Real Estate Channel. So
yeah.
thank you, Rhys, for providing us with that valuable insight. And I hope we'll see you back here on the channel.
Thanks a lot, man. And I will stress this at the end. If things were bad, like the global meltdown, I would tell you things are bad, and this is how we pivot and still make money.
Good.
It's
Yeah,
okay if things are good or bad. You got to tell the good, the bad, and the ugly to your client base, because there's always a way to make a profit depending on what the market is doing. Right now, it's a breather before it takes off again. You have to adjust and anticipate that if you want to maximize your profits. We're here for you down here.
problems are profits. And I love that for him. Okay, guys. Well, we will see you back here on the Canadian Real Estate Channel very soon. And I appreciate you tuning in. Check back in the new year, December, for another video and an update from Rhys, because I'm sure we're going to continue experiencing developments in both the employment, in the prices of Windsor, the
Yeah.
rents in Windsor, and of course, more market deals. So appreciate you guys for tuning in today. We'll see you back here soon. Cheers.